What's up, everybody? Welcome to Swan Signal Live. I'm your host, Sam Callahan, Senior Analyst at Swan Bitcoin. Got a great show lined up for you guys, but before we get started, I want to bring up one of our sponsors, and that's Cloaked Wireless. They provide the best protection against SIM swap attacks. If you don't know about them, you should study them and protect yourselves. So you can do that with Cloaked Wireless, which is a privacy-focused provider where you can pay with Bitcoin, whether it's to secure your primary phone number or some kind of secondary device. Everyone should protect themselves against SIM swap attacks, and you can do that using Cloaked Wireless. So check it out. QR code right there. If you use Swan, you can get 25% off at your checkout. So protect yourself today with Cloaked Wireless. And today we're going to really be talking about Bitcoin mining, and it's a big hot topic. There's been some updates at the regulatory front, as well as everybody's wondering how they're faring post-halving. And can't think of a better guest to have on than the CEO of Marathon Digital Holdings, Fred Thiel. So Fred, thanks for coming back on Swan Signal Live.
Great to be here.
Yeah, I thought we could maybe start. There just seems to be this huge shift happening on the regulatory front and in the political realm around Bitcoin mining. And it really, just yesterday, the leading presidential candidate, President Trump, he said something really interesting to me. And he's talking about why he's been pro-Bitcoin. And he says, to help the U.S. remain energy dominant. And obviously, we had the Republican National Party update their platform saying specifically that they want to support Bitcoin mining. So let's start there. Like, what are your thoughts around some of these recent comments and developments?
Well, I think our team met with President Trump at Mar-a-Lago a few weeks ago, together with a group of other miners. And he clearly gets and understands that Bitcoin mining is an issue of national security. And here's the real reason why. Imagine a world where the US started holding Bitcoin as a reserve asset. They would need for Bitcoin mining, the bulk of Bitcoin mining in the world, to be done in the US, for that to be something that the US could do with confidence. And so if the US were to hold 1 to 2 million Bitcoin in a digital Fort Knox, what you would find is essentially over time, as that Bitcoin appreciates in value, it could essentially pay off a greater and greater portion of the national debt. Because after all, how is the national debt denominated? In fiat. What's happening to fiat? It's losing value, whereas Bitcoin would be growing in value. So it wouldn't surprise me if the administration announced a strategy around using Bitcoin as a national treasury reserve asset, in a small scale. I mean, after all, 2 million Bitcoin would be, roughly $120 billion. And by US debt scale, that's a very tiny number. It's a rounding error. But when you think of it in Bitcoin terms, that would be almost 10% of all the available Bitcoin in the world once Bitcoin is fully mined at 21 million. So pretty substantial holder. The U.S. is the largest holder of gold in the world. The U.S. is, one of the largest energy producers in the world. And so I think as you look at the future under a potential Republican administration, and in the event the Republicans sweep the congressional elections as well, what I think we'll find is a very pro-Bitcoin policy narrative all around, hey, we need to leverage Bitcoin mining as a way to stabilize grids. We need to use it as a way to support and essentially subsidize the build out of renewable energy, solar, wind, et cetera, where today, because of lack of transmission capacity, there's no way for a number of these projects to be financed. 80+% of these renewable projects get canceled before they're ever built because there's no transmission capacity, there's no interconnect. And FERC has tried to change the rules, but I think it's still something that you'll see impacting. The other thing is Bitcoin's ability to use stranded energy in the form of methane flare. So all this methane flare that's being done on oil fields would be a huge boon for Bitcoin mining potentially. So we're very bullish on all of these areas. We think that the Trump administration could do a lot of very positive things for Bitcoin. I don't know if you saw Larry Fink on TV the other day.
Yeah, that was pretty phenomenal.
Chiming in. And, there's some rumors. There was an article from Forbes that I posted on my Twitter feed the other day where, Jamie Dimon supposedly is changing his tune, which would be, Mr. Naysayer #1 for Bitcoin. So I think you're going to see at the Nashville event this week a number of announcements from lots of different people, both in the industry and outside the industry, that are very pro-Bitcoin. And so we're very bullish about Bitcoin, and we think the US is going to be very bullish about Bitcoin under a Republican administration. So we're super excited.
Yeah, I mean, there's lots of reasons to be bullish. And, the Treasury Reserve strategy, that was echoed by Senator Lamas on television as well, kind of testing the waters with that idea, I believe. And, Jamie Dimon, I think I need to hear a little bit from his own mouth. It's hard to believe because, I mean, he was just under testimony saying that if he was the regular federal government, he would shut it down. And to think that he's pivoting as well, I mean, that's pretty shocking development if that's true. And I'm just wondering,
you should think about, he's potentially vying for the job of Secretary of Treasury. So,
yeah. I mean, which is, a really important job. I mean, when it comes to Bitcoin adoption, I mean, the DOJ is out of the Treasury, and it can really turn the tides if we have somebody who is more sympathetic to Bitcoin in that position. And so, when Trump was president last time, there was Steve Mnuchin, and he was kind of historically, I would say, anti-Bitcoin. So if we do get like a Diamond going in there, I mean, it could be a big development if he has pivoted like Trump says. And I'm just wondering, Marathon has Bitcoin miners go to where the cheapest energy is. I mean, that's one of the beauties of Bitcoin mining, I think. And Marathon has kind of expanded its operations globally, I would say, over the last year or two. A lot of great projects you guys are developing. Do you see a situation where there is kind of even some like subsidies for Bitcoin mining to continue to grow within the United States? And then how do you look at like the opportunities when it comes to cheap energy? I saw an interesting chart the other day that the U.S. is actually producing more energy than it's consuming for the first time in decades, or maybe even ever, I might think. So how do you see the opportunity in the United States versus globally? And do you think the government is going to do anything to maybe support even the development of the Bitcoin mining industry within the United States borders?
Well, I think you're going to see under a Republican administration a couple of things. One is they will likely increase tariffs for foreign imports, which is going to be a boon for U.S. technology manufacturing that's done onshore. And as you know, we have an investment in a company called Auradine, which we co-founded, which is the only U.S. real manufacturer of industrial scale Bitcoin miners. And we think that'll be a huge benefit for Auradine. The other thing is the U.S. is the largest producer of oil in the world today. We pump more oil than any other nation out there. And the Republican administration will likely let loose even further expansion of that. And when you pump more oil, what ends up happening is you get more natural gas because the two of them come out of the ground somewhat together. And when you have more natural gas, what does that do? Well, you have a lot of electricity in this country is generated using natural gas that will lower the cost of energy generation, electricity generation. And so I think what you may very well find is a government that is sympathetic to providing subsidies to Bitcoin miners who are able to help renewable energy generators generate more electricity because they're able to be baseload offtake from them. You'll also find subsidies around initiatives that Bitcoin miners do that support securing, if the US does go into holding digital assets, securing those assets in a very good and safe way. And so I think we'll find this will all be good for the industry, across the board. But that being said, we have a stated goal that by 2028, 50% of our revenues will come from outside the US and 50% of those revenues will be non-Bitcoin mining related. So we're very focused on the technology innovation. We're very focused on the energy harvesting areas where we can, capture stranded energy, capture energy that's underutilized. And you may have seen, we recently did an announcement with the government of Kenya, where we're working with them to evaluate their stranded energy or underutilized assets. You may have seen something in the press recently that the government of Tanzania published that they're having to shut down power generation because they have too much power. There is tons and tons of cheap power available outside the US. And at the same time in the US, we're starting to see the certain environmental groups funding essentially pushbacks at the community level from Bitcoin miners regarding noise and other things. And we personally think that this is kind of an effort that is very counterproductive. I'll give you an example. We operate in a community in Texas called Granbury. the property taxes we pay because of our operations there fund the police department, they fund the fire department, they fund a lot of public services, which otherwise the homeowners in the town would have to pay taxes for. There are a group of people who claim that we are making excessive noise. We recently just won a case in court locally showing that, you know, they had the local constable even perjured himself on the stand with what he said about our noise levels. And, you know, it's really become a very political issue at the grassroots level. And so I think what all Bitcoin miners need to do is focus on being great custodians and great members of the communities that they operate in. But we really have to watch out for certain groups that are very focused on trying to paint Bitcoin mining as this bad thing, because in Texas, you have many people competing for energy. It's not just Bitcoin miners, but you have battery lobby, you have the peaker plant operators who, you know, they love it when there's no electricity available because they can charge $5,000 a megawatt when normally a megawatt should cost at wholesale somewhere between, you know, $30 and $40 a megawatt. So all of these people are very focused on trying to shut down Bitcoin mining in the state. And even the lieutenant governor has taken a negative stance around some Bitcoin mining, while, you know, Senator Cruz obviously is a Bitcoin miner himself. You know, I don't know if you saw the interview I did with him on stage.
I did. It was great.
Yeah, where, you know, he's got his 3 Bitcoin miners mining and he's a Bitcoin miner. So, you know, we all have to work and rally around this. You know, Bitcoin mining is good for communities, and really cement Bitcoin mining as a core part of the U.S. energy policy.
Yeah, I mean, I saw the publication that you mentioned. I mean, it was just kind of ridiculous. I mean, I saw one that the noise pollution was causing dogs to go bald and lose their fur. Like that was one of their narratives. I just had to chuckle because what you're saying is so true. I mean, not only does it help revitalize those communities, it brings jobs to the area as well, and all sorts of benefits that Bitcoin miners can bring.
Yep.
And then, as you mentioned, I think, you know, it's a shame that it is becoming a political issue, because there's reasons for people more on the left to actually embrace Bitcoin as well. You already mentioned it makes these renewable projects more economical to have Bitcoin mining, but it is a nuanced discussion. It takes a little bit of learning, but I think education's key to getting that message out there and bringing those people onto our side, because in the end, I think a lot of people will understand that Bitcoin mining actually isn't this big bad thing that is made out to be in publications like that. But can we like just double click a little bit on the Kenya deal? I just want to learn a little bit more about how that came to be, what you guys are doing over there. It was really interesting to me. I just want to learn a little bit more.
Sure. So the Kenya deal came out initially. It was an initiative where our energy harvesting team was out canvassing the globe, kind of looking for underutilized energy assets, and they came across an asset in Kenya, which is a dam, which during the day isn't able to sell its electricity because there's a lot of solar energy available now in Kenya, and the price of solar is lower than the price of the hydroelectric energy. And so the solar energy gets preference into the grid. And so during the day, the electricity produced by this dam wasn't being utilized. And so there was some interest from the operators of the dam to have a baseload customer that could essentially soak up all of the energy from the dam during the day, and then at night shed load so that the communities that previously were running on solar could then run off the hydroelectric energy at night. And this, you know, this type of load shedding doesn't work for AI data centers. And so as we started talking to more people in the U.S. Foreign Commercial Services, we got connected with Ambassador Meg Whitman, who, you know, if anybody knows Meg Whitman's background, obviously, you know, former technology CEO of a number of leading large technology companies, including HPE. And she got right away what we were trying to do and was very helpful in helping us connect with the right people at the presidential level in Kenya and work with the government. And then our teams worked with the Kenyan side. Sorry about dog barking. Our teams worked with the Kenyan side to essentially come up with a game plan, which is that we would form a committee jointly between Marathon and the Kenyan government to evaluate all of the energy assets that Kenya has and see which ones could be used for Bitcoin mining. At the same time, you had Microsoft and Google going into the country wanting to build AI data centers. and
Yeah.
committing to making an investment there
Yeah.
to the tune of around $1 billion, I think.
Wow.
And so, it worked out quite perfectly. They need a certain type of energy. We need a different type of energy. We're a dispatchable load. We're able to use energy that can be shed. And so it's a very complementary. What's also interesting is what came out of this is some work that in looking at AI and Bitcoin mining and how the two work together. AI, when you're doing learning, is generally a constant load. But as you move into inference, that load starts resembling the traffic patterns of search. And if you look at Google search patterns during the course of the day, it's a bit like electricity demand. It has certain peaks and valleys during the course of the day. And so if you have Bitcoin mining that can be overclocked and underclocked, working together with an AI site, you can generate a consumption that is flat to the grid, which is the most important thing for the utilities in the grid, is that your demand for energy isn't varying, because they have to vary the supply then. But if you can continually draw the exact same amount, it makes managing the grid much easier. And so this complement of Bitcoin mining and AI all of a sudden is becoming very interesting. So an
I didn't know that.
offshoot of this Kenya deal is that we are very actively engaged now with people developing data centers, large hyperscalers, to be that variable offtake. Because in our technology group, we've developed a type of immersion technology. We call it two-phase immersion. And in that system, we can overclock miners over 60%, and we can underclock them way down, which means that we have this huge flexible load that we can have running in parallel with an AI data center. And whenever they are not using full load, we can overclock our miners and consume whatever they're not using. And when they need more, we can actually underclock our miners. And so what I think you're going to see in the very near future is more and more deals where Bitcoin miners and AI operators are going to co-locate. And that's going to become very interesting.
Yeah, because man, I didn't know there was almost like a duck curve issue with the AI in a way, right? It's kind of what you're explaining there, and how that flexibility of Bitcoin miners, from my understanding, is extremely unique, right? And so, how do you see that playing out? Do you see it more like similar to what we saw with Core Scientific and CoreWeave? Do you see kind of deals like that happening? Do you see partnerships? Do you see these large companies actually getting into Bitcoin mining? Yeah.
No, it's a very different model. I think what you're going to see is Bitcoin miners working with data center developers to basically be the power regulator at the site. So control the interconnect, control the site, and be able to be this flexible load according to the needs of the AI operator. And then whoever the AI operators that comes in there will be paying the data center operator some form of hosting fee, most probably, and then paying for their share of the energy. And we sit there as a partner to the data center operator, working together. In the case of the CoreWeave deal with CoreWeave is essentially paying for the infrastructure. They're fronting the money to build this site. It's a great, in the case of, Core Scientific, they have these great sites with great internet connections, which makes a lot of sense. But the CoreWeave deals are one-offs. I don't think you're going to see other miners be able to achieve anything near similar. If you're going to really be successful long-term in the AI space as a Bitcoin miner, you're not going to operate HPC. It makes no sense for Bitcoin miners to be operating NVIDIA rigs or investing in them. It's so capital intensive, and they get obsoleted. NVIDIA is obsoleting their technology every 6 months. So when you look at the cost, I'll give you an example. A 200 megawatt site for an AI operator is a $4 billion investment, right? There's $800 million of infrastructure, buildings, networking equipment, et cetera, and then $3.2 billion of rigs, right? A 200 megawatt Bitcoin mining site's about, at the high end, $200 million of investment for a Bitcoin miner. It's a totally different scale. You're talking 20x. Right. So, and Bitcoin miners don't know how to operate HPC sites. I think anybody who says that is really, giving you a load of baloney, because the network design, the architecture of the site, the uptime requirements, the need for redundant power, all of that does not exist in Bitcoin mining. Right. Think about it. Bitcoin miners don't have redundant power. Bitcoin miners typically sit behind the meter. They shed load whenever they have to. They're operating in containers. They don't have sophisticated networks. They just need their miners to connect to a pool and share their workloads. So I think really, as we look at this industry, once the hype of all these people coming up with these announcements, like are they announcing they're going to be an HPC company? Come on, it's a load of crock. At the end of the day, what you're going to find is they're going to be large Bitcoin miners who partner with data center builders who are building hyperscaler scale sites, gigawatt sites. And they're going to be that essentially flexible load that acts as the companion to the AI that makes these sites much more economical for the AI operators to run.
That's fascinating. I remember last time you were on the show, you were actually mentioning similarly the operational challenges, I would say, to these Bitcoin miners incorporating HPC. But the fact that there could be this symbiotic relationship between miners and AI is really interesting to me on the regulatory front as well. I mean, there's a lot of money back in that industry right now. And so do you think if we do have more, let's say, narratives about, using too much energy, do you think AI would help kind of offset some of that regulatory pressure, or, be a partner on that fight as well, like with AI and all data centers, and including Bitcoin miners, joining their voices in DC to advocate for themselves? Do you see that kind of happening?
Yeah, well, I think you're seeing already some blowback that the AI industry is having.
Yeah.
One is, you may be familiar with this deal that AWS did with the Talon Energy for this nuclear energy behind the meter. And what you've got is transmission capacity in the US is funded through people paying for electricity tariffs. And when somebody goes behind the meter, they're essentially not paying any transmission tariffs. And so how do you manage to build out the trillions of dollars of transmission that are missing in this country today when nobody who is buying big loads is needing to pay transmission? And so I think you're going to see a need to reevaluate how utilities price power, especially as, when a large customer goes behind the meter like that. And that's going to change things. So the AI industry is having to start working with the Bitcoin mining industry. But to be fair, I mean, AI is going to consume, 10 to 20 times the load that Bitcoin mining is. And Bitcoin mining is every day becoming more and more efficient. I mean, think about it. 2 years ago, we were running miners that we were proud of that ran at 30 joules a terahash or used 30 watts to produce a terahash. Now we're talking about miners at 15 joules per terahash or 15 watts a terahash. That's a 50% reduction in the amount of energy for the same amount of hash rate, which means you can take a Bitcoin mining site that's 100 megawatts that before would have been 7 or 8 exahash, which all of a sudden now could be potentially, 16 or something like that. So it's pretty interesting what happens as these machines become more efficient. And if you then look at the other aspect of AI, which is water use, the vast majority of AI systems today are cooled with water. And that's a huge headache. Look at the news about how Microsoft has gotten dinged about their water use for AI. Google has gotten dinged for it. When you use cooling technologies like our two-phase immersion, there is no water used in it. It's a closed loop system. It doesn't need any water. You're not wasting water. And so what you're going to see is all of these AI OEMs shifting to machines that aren't liquid on-chip cooling using water, but move to full immersion in two-phase tanks. And we can provide huge power density for these guys. We can put 800 kilowatts of power in an 8-foot tank. You can't do that using normal racks. Normal racks today are 49 kilovolts or something like that, right? So that type of density, I think you're going to see increase. You're going to see also more data centers at the edge. You look at some of the initiatives that Oracle has talked about with their small micro data centers at the edge, because inference for AI won't be done in the cloud. It'll be done at the edge, right? Think about Apple's strategy, right? You're going to sit on your phone. You have Apple Intelligence. You're going to ask a query. If they can't solve it with the data that's on the phone, it goes to one of Apple's data centers. If Apple can't solve it, only then will it go to ChatGPT or another vendor, OpenAI, right? So Microsoft is moving the same way. They're putting all the intelligence in the edge device. right? So if you're doing inference at the edge, there's no need for these big centralized cloud data centers for inference. It'll be done at the edge because a lot of the data will be private cloud data. If you're an oil company and you have your seismic data, you are not going to put that up in a public cloud anywhere. You're going to keep that in your data center, which, oh, magically, it's located near the oil field. Why? Because the volume of data you're generating and needing to analyze is so big that the network bandwidth required to get it up and down is too much.
Yeah.
And have anybody who's looked at the big data industry that measures high velocity, high density data with high frequency use will tell you that internet infrastructure doesn't support that.
Got it.
And so long term, this will all be at the edge, which means lots of small data centers at the edge, which means lots of immersion technology.
Yeah, it seems like one of the narratives I would say around Bitcoin miners, getting into HPC is to diversify revenue streams. And one of the challenges of all miners is the randomization of, the main revenue stream, which is obviously Bitcoin. And they think, hey, we're going to get more steady revenue stream if we go the HPC route. And there's other ways they do it too. That heat reuse is another one that kind of is gaining traction.
Mm-hmm.
And but you guys, did the Casper thing, which caught some people off guard. I mean, it's I think 1% of your energy capacity, but you said you did it to kind of diversify a little bit. So can you go into maybe a little bit of why you guys decided to do that strategy?
Well, so think of it this way. Let me preface this by saying, we are first and foremost, Bitcoin is our treasury reserve asset, right?
Mm-hmm.
We keep all our assets in Bitcoin. So if there are ways for us to acquire Bitcoin at lower cost than mining it, shouldn't we evaluate that as possible? And so Casper mining is very, very profitable today. Over time, because of the way the halvings work in Casper, it'll become less and less profitable. But at the moment, it's very, very profitable. And so we were very early on, acquired the ASICs that were at the bleeding edge of the curve, have a significant portion of the hash rate of Casper, and it generates a lot of revenue and at very high profit margin. We can then take that profit margin and invest it in buying Bitcoin. Now, it's so profitable that it's actually cheaper for us to mine Casper and buy Bitcoin than it is for us to mine Bitcoin using Bitcoin miners. And I'm not saying we're going to abandon mining Bitcoin. It's a traditional way, but there are ways to complement what we do, which makes it easier for us to acquire and hodl more Bitcoin.
Yeah, and I saw that you guys hold, I think, over 18,000 Bitcoin right now. And I think there's a lot of narrative around miners selling after the halving. But really, we haven't seen that much of that from at least the large miners. Their balances have been going up. You guys didn't sell any Bitcoin in June. So talk a little bit about, I think the final question I want for you is just talk a little bit about how miners are faring post-halving. I mean, we've seen hash rate drop a little bit. I think continues to drop right now. Electricity costs, like if we could just go into all those factors, price action obviously has gone sideways. How are miners faring? And what's your strategy around, holding on to that Bitcoin? Because other businesses, say like oil, for instance, typically when they're producing oil, they sell the oil they produce, to fund their businesses and things like that. And so, but with Bitcoin miners, it's a little different. They actually hold on to the Bitcoin that they, produce. And so maybe go into that strategy a little bit, and then more broadly, how Bitcoin miners are faring post-halving.
Sure. So if you look at most Bitcoin miners, the ones that have public equities that are able to sell public equities have essentially been issuing equity as a way to fund their operations. Bitcoin mining is hugely capital intensive. Even at today's low prices for rigs, it's still very expensive to build a Bitcoin mining site. And so, you look at miners like CleanSpark that have diluted their shareholders by 300% over the past 2 or 3 years, 3 years most probably. Riot, similarly, these companies, and Marathon too. I mean, we have a lot less than Riot or CleanSpark, but we sell shares on a regular basis as a way to fund all our growth initiatives. And for the past year, really 2023 and the first part of 2024, we shifted to a model of selling some of our Bitcoin that we produced to fund operations, so we didn't have to lean on our stock, meaning sell our stock as a way to fund operations. And now as Bitcoin price again begins to ramp, it makes sense for us to revert to more of a full hodl strategy. And I wouldn't be surprised if you see us at times going into the market and actually buying Bitcoin with cash, because obviously, if we're generating cash from things like Casper and selling technology, we want to hold that cash in the form of Bitcoin. We have to acquire Bitcoin to do that, because what we mine, we keep. Then it would be a question of hodling that. So
Got it.
yeah, that's in our specific case. Now, the broader industry, I think, has some challenges. Anybody running S19J Pros is struggling. Anybody running S19s has shut them off most probably at this point, especially when we were in the 50s in the past couple of weeks. It made no sense. You couldn't mine profitably. And you're starting to see miners in places like Kazakhstan get shut off. People like Genesis Digital Assets, who have a lot of very old machines, have most been shutting off their machines. You have other miners, shutting things down. But at the same time, you have miners adding hash rate. I mean, we've added hash rate in the past month, and yet the global hash rate keeps declining. So what you'll end up seeing is likely the large publicly traded miners will continue to add hash rate. The medium-sized guys are going to struggle because they don't have access to capital like we do, and they have to sell all their Bitcoin typically to fund operations. And then the small guys are really just going to be struggling because they're not able to do the maintenance CapEx, which is the concept that, if you have miners that are 2 or 3 years old, they're reaching the end of their useful life from an economic perspective, because those miners aren't energy efficient enough. And, we just need one little spike in the price of electricity, like we had in 2022. And that would be very damaging to all those small miners.
Got it.
And so I fully expect there to be some, lots more consolidation in the industry. I fully expect there to be, a number of miners going out of business or transitioning completely away from mining into other things. So I think it'll be a very interesting balance of the year and into next year. So.
Yeah, I mean, that's the economies of scale with Bitcoin mining. So yeah, I mean, just thank you so much for coming back on the show. I always love talking to you. Always love hearing your insights. Obviously, you have a great vantage point given your position at Marathon. Is there anything you want to mention at the end, or where can people find you or follow your work or Marathon to keep up with what you guys are building over there?
Well, you can follow Marathon at mara.com, mara.com. You can find me at FGTHIEL on Twitter. Marathon has a pretty active Twitter feed as well. And a number of our executives are out there promoting things. And I think you'll see a lot of exciting news coming out from Marathon in the industry in general, but I think you'll really see this industry start maturing here over the next couple of years and becoming moving away from this kind of digital wildcatter business and moving into something that's very similar to the energy industry.
It's certainly exciting times. And will you be in Nashville next week?
I will be in Nashville all week.
Awesome. Well, hopefully we can maybe see each other in person then. Thanks so much for coming on the show, Fred. Always appreciate it. And best of luck with everything you guys are doing over at Marathon.
Appreciate it. Look forward to it. Thanks.
Well, that was fun. I mean, whenever Fred comes on, it's always a really popular episode, and you can see why. I mean, he's just very insightful about Bitcoin mining, but also generally Bitcoin. And so always learn a lot from him. Hope you guys enjoyed it. Let me know what you thought about this show. Like, comment, subscribe. It's been a pleasure being here on Swan Signal Live with you all. Always appreciate your support. Until next time, I am out. Thank you so much for listening.